It's your money and your money matters. For the best advice to help you succeed, turn to Gib and John. They know what you need to make the right financial.
Let's start off by talking about what seems to be the ultimate driver now going forward for the market, and that would be
corporate tax reform.
correct. For the middle class person, is this tax plan really going to help me?
It's not really going to help individuals that much.
Right.
I think that if you're an income, combined household income of $50,000 to $75,000, the last number I saw is that you probably, after all of the shakeout, you're going to have a $400 to $500 overall savings in taxes.
You're right. Individually, there's not going to be that much a benefit for individuals. Now, what I do hope is going to take effect, which would affect individuals, is the AMT tax. I hope the AMT tax is removed.
It looks like it's back in.
Oh, well.
And it looks like it's back in, and it's been adjusted to up the AMT amount, which it hasn't been done in like 30 years. So it looks like that's still open for debate, but it's still part of, looks like it's going to be in the Senate bill anyway. This week's weekly market commentary was the 2018 stock market outlook.
Yes.
And I can tell you, we'll just boil it down. It was about a 4-page weekly market commentary. And I'll boil it down to this. Basically, our weekly market commentary said if we get corporate tax reform, as we just talked about in the first segment, there's a lot of momentum to get this done, maybe by year's end. If it's done, the outlook for 2018 is pretty darn optimistic.
It could actually add, and we said in the commentary, it could add another 5 to 6% boost to
earnings growth.
And so that's off of another strong year, what is going to be a very strong year, 2017. And so that bodes well, sets up 2018 for a high single-digit, low double-digit type of potential return.
I think you also have to look at what are your investments. At that, John's looking around.
That's a fire truck.
Yeah,
no kidding.
truck out
They have those in Winston.
Yeah, that's kind of neat.
That's the price you pay for being in the storefront studio.
I was a little kid. I wanted to go out on the
I was trying to be professional and just ignore it. You're looking at like a little kid.
I wanted to see if I saw the dog.
See a Dalmatian on there.
Yeah.
No Dalmatian.
Tom in Winston, kind enough to give us a phone call. Tom, how are you? How can we help you?
Thanks for taking my call. What I'm curious about is the market has dropped, not dramatically, but consistently this week, and I can't find a reason for that.
There are two reasons, and we touched on it in the first or second segment. I think that there's some profit taking going on, especially in the technology sector, and I also think that there is some rotation out of whether it be technology, whether it be defense, whether it be some of the areas that have had huge run-ups, and moved into financials, moved into industrials, moved into other areas, and that's causing a bit of a backdraft.
I think going back to the discussion also that the market is returning to basics. Part of the cycle of the market when it is being driven by the data of the market is to take rest. It resets itself.
This market is looking for a sell-off.
Right.
In fact, portfolio managers are really, really hoping that they see a pullback. And that dovetails nicely, Tom, into what I think is a fearful part of the market, is what you're bringing up, is that people have forgotten, because it's been over 330 days since we had a 5% pullback in the market, and that 5% pullback is coming, and it's going to be doubly painful for a lot of people because they've forgotten.
And historically, the market has in a year's time 2 to 3 5% pullbacks.
That's right.
And we haven't had one in over almost 8 years. Tommy, it was a great question.